Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now we're seeing the equities gyrate back and forth. They went lower shortly after the bell. Now, they sort of refreshed at that point, too. They fell right between first and second key support. We do still feel that the market is exhausted, and it's going to reach that exhaustion point within 1% of where it is here this morning, coming into this morning. A lot of resistance overhead. CPI this morning as well didn't really give a reason to move in either direction, right in line with expectations. We head into next week, and it's going to be headline driven. It's going to continue to be that. We had a lot of Fed speak this week. Again, we're seeing the market gyrate back and forth. We don't have a major 3-star support level until well below the market, so take a look at the Morning Express and check that out. Moving on to crude oil, we did have an interview this week, talked about don't get that FOMO when the market moves up and you're not in it. It's been on fire. The whole energy sector been on fire since the start of the year and bottoming after Christmas. But it matters if you're trading or investing. Now, you don't want to chase it, especially if you're investing. But now that we've seen $53 trade overnight, you don't want to chase it too, even if you're trading. Got to be very careful. This market is going to be susceptible to pullbacks down to $49, and it can still be in a recovery uptrend, even if $49 trades. Got a big 3-star support level down there, so watch out for that. But ultimately, fundamentally, we got to see a shift here in inventories. We talked about it in the Morning Express. We went into detail, as well as 2 other key factors. And then one of this is going to be continued fresh jawboning from Saudi Arabia or OPEC. So check that out in the Morning Express. And then lastly, touching on gold and the dollar and treasuries, you're seeing the treasuries move back up north today. No movement on CPI outside of expectations, really to push it, but that's just a big support level. Yesterday, the treasuries sold off with a weak 30-year auction, but again, they're bouncing back today. Gold moved lower early in the session. It's holding, out above first key support. So that's crucial there for gold, and it's right below our momentum indicator. So it is consolidating. However, we do have a lower high in gold for the second time after trading 1,300. But if treasuries continue to recover, that could help pull gold up. Now for the dollar, you're seeing a move off the lows of the dollar. 95.5 is going to be what you have to watch here on a closing basis on the week. There's a trend line, and below 95.5. That's a trend line on the weekly from the lows last year. And below 95.5, it's going to be secure a close below there. So that's going to be crucial for gold to keep a bid for the dollar stay sort of weak. Now, the dollar index is up today, and it's down on the week, but it's up today to neutral, depending where it is right now as I'm talking. But the Chinese yuan is not in that dollar index, and the Chinese yuan has gained 1.5% on the week. That's helped gold in the face of the treasuries coming back from the highs. So continue to watch that Chinese yuan. It's going to be very crucial for the path of gold, especially if gold's going to break out above 1,300. Now, we remain very bullish gold, but we have been talking about capitalizing on strength. Give us a call. We're here to help talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.